But here's the first tick on the index, well in the green. 18,557 is what we're seeing on the Nifty, and the Sensex holding pretty above that 62,500 mark. It's the Bank Nifty that's gaining from the front, or leading from the front rather, 0.5% higher on the Bank Nifty, and the mid-cap index is also trending ahead about 0.5% higher. The advance decline ratio is well in the green at the moment, with almost 1,700 stocks on the advancing side. The street definitely likes the auto sales numbers. So Hero MotoCorp is your top gainer right now, up almost about 2%, followed by a couple of these names like Eicher Motors that are also trending in the green. TVS Motors looking good in the broader markets, and we'll talk about that in greater detail. We also have banks that are pushing from the front. So Kotak Mahindra Bank is up almost about 0.7%. So looks like a secular move. A couple of these oil and gas names like ONGC are also trending in the green right now. Good opening, decent opening for the market. The Nifty, in fact, holding on to that 18,550 mark as we speak. And looks like the broader market setup is also pretty decent.
Yeah, but let me just round up some more names from the large cap space. While, of course, auto is in lead position, Hero Moto now is the biggest winner on the Nifty, 2.5% higher. Check out metals. That's the other major trade this morning. Manisha was telling us about how prices have started lifting up. There's generally better sentiment in China as well this morning. Hindalco is up about 2%. Tata Steel is up about 1%. You have JSW Steel that's rallying through as well. So metals and auto, these are the two big trades of the morning as things start off. Reliance is lending some support to the market, about 0.5% higher last time I saw it. So that's another strong pillar that continues to work. Infosys is down. It's actually the only IT stock that's in the negative right now. Others aren't that bad. I think this is also a fallout of the dividend. Yes, Infosys has gone ex-dividend today. And therefore, there's some pressure on the stock, 1% lower. IndusInd Bank, again, is a dividend fallout. It's a pretty big dividend that they've paid out as well. So that's a 1% drop on IndusInd Bank. So you rule out these two, and then it is a very, very solid opening. 70 points higher on the Nifty. Let's look at some of the stocks that have been in the news as well. You have Moil, which is up 2.5% on some of the price hikes that they've undertaken. Aditya Birla Capital, where promoters are infusing equity in the company, 1.5% higher. Aster DM looking to make some acquisitions in the hospital space, 1% up over there as well. InfoEdge, by the way, is now absolutely trending fine, 0.5% up. It was a little wobbly in the pre-open, but again, the clarity is that they've already provided for it. They've taken the impairment in the third quarter. So this is not fresh negative news in terms of, more of an impairment or more of a financial damage. That's how it's playing out for the time being. Mid-cap markets up and away. 0.5% of a gain already on it. On the volume charts, is there anything that stands out? Zomato, maybe it's the weekend factor. Suzlon is continuing its good run. And there's some buying on NCC as well, early buying. That's visible. But Prashant, a pretty green-looking screen, at least for now.
No, absolutely. 67, 70 points on the Nifty. We are at 18,554 as things stand. I don't know if you guys mentioned Cyient. Cyient is up another 5.5%. Is just gone berserk. I mean, there's no other way to put it. But what a move. 80% this year, 78 point something this year. It's so many stocks have seen a complete re-rating from that space. The other one is nuclear software, which this year is up 200%. This year, I mean, 5 months. So just quite something. Zensar Tech is another one, which is up 85% this year. These are smaller, tech companies, very small tech companies that we're talking about. Westlife is continuing from yesterday's 7-8% gain. It's starting about 1.5% higher. And there is Campus, which is up about 1.8. Campus has been selling off last 2 days after results, and it's up about 2% or so.
By the way, the mid-cap index is now at a record high. So, there's so much traction in the broader markets. And Surabhi was talking about the weekend factor for Zomato. I don't know about you, but it's a through-the-week factor. Swiggy, Zomato and all of that, right? I think weekend is more like PVR, perhaps United Spirits.
And Lemon Tree and the likes, right? You guys were having that conversation earlier, I think, hotels and hospitality. Actually, let's just take that question to Naren. Naren, we've been discussing this and the numbers are there for all to see, right? The way the hotel companies are sounding, and most of them are saying that the average room rates are 25 to 30% above the pre-COVID levels as well. Is this a space that interests you? How would you play, let's say, the top end of premium urban consumption?
No, I think the top end of premium consumption is in great shape. Over the last few years, it's done extremely well. And there doesn't seem to be the top of the cycle yet reached. But it's again tough from a valuation point of view, how to buy it at this point of time. The tougher what we're doing at this point of time is saying, okay, we will not sell it. But how do you buy it? Because if you look at most of them, they have actually gone up more than 100, 200% over the last 2 years. And that's why we would say that we would not buy it right now, but maybe we won't sell it. And, we are also helped by the fact that, in this geopolitical middle, we had the G20 coordinator. So we have so many G20 events. You have a World Cup coming. So many other positive developments which are also helping many of these sectors like hotels and airlines. We're seeing consolidation in the airline industry. So that is another positive. So we've seen so many positive events in these areas. So I think clearly this sector is going to do well, but the sectors are not cheap at this point.
So Naren, you're saying across the board, companies catering to the premium segment will continue to do well, but they're pricing it in. I mean, it's in the price, mostly across the board. So while you may not sell them, they become difficult to buy as fresh buys.
Yeah, absolutely. We are believers, in Howard Marks' school of cycles. So most of the time, we are trying to see what can be bought at the bottom of the cycle or towards the bottom of the cycle. And today what we find is there is nothing towards the bottom of the cycle. I mean, there were a few like auto, for example, which was towards the bottom of the cycle. So what we did was we launched a transportation fund last year, and you can see the way auto stocks have been taking off actually. Then we felt that, some of the innovation and growth-oriented stories were doing very badly from the time of listing till now. So we launched an innovation fund. Now you can see that even innovation and all those new age have also started to go up. So almost there is no area where we are able to see in India, which is at the bottom of the cycle. The only areas where we're seeing at least some level of fear is in IT and pharma. But in IT, we don't know how ChatGPT and those kind of things will play out. So maybe we like pharma as one of those sectors where we find that things are. And from a cyclical perspective, people like power. Yes.
Naren, sorry to interrupt you. I mean, I just want to talk a little more about pharma to understand what's happening here. Because, there is a lot of caution, right, in the system. If you look at, say, the diagnostic companies, there's so much competition there. In some of the other companies, there's pricing pressure from the US, which is still sort of marring their earnings. How do you decide what to buy in pharma now? And is it just a valuation game, or is there growth upside as well?
So that's why at the bottom of the cycle, you have companies going bankrupt in US. So that's happening at this point of time. You do see some companies doing very badly in US. One or two generic companies have actually closed down. And you can see a fair amount of pricing pressure has happened. And the questions that you raised itself give room for the fact that you are towards the bottom of the cycle. And there are hardly any sectors towards the bottom of the cycle at this point of time. So that is why, between the fact that generics is hardly done well, actually. In fact, if you look at some of the global generic players in US, they're all trading at even below 5 PE at this point of time. So which are just pure global generic players. So I think that is an indicator that some of those stocks are really towards the bottom of the cycle. And that is the rare areas, I would say, which are towards the bottom of the cycle at this point of time. But, India is such a deep structural story that for you to look for something at the bottom of the cycle is very, very difficult. Because when you talk to anyone from foreign brokerage at this point of time, and I'm sure you can get any amount of research report showing at this point of time that India is the best structural story at this point of time in the world. So it's very difficult to find any bottom of the cycle stories at this point of time. And that's why, in our team, when we look at most of the research reports, anything which is India driven has moved from focusing on valuations which are based on earnings to valuations which are based on EV/EBITDA, which means that you're not focused on valuation based on earnings. That's a very interesting development. is seen in any big up markets.
Okay, got that. So the trouble seems to be finding themes and ideas which would be at the bottom of the cycle. Of course, you have always been a big proponent and a big believer in the contrarian way of approaching the market, Naren. Let me, turn the focus to financials, because now one hears, a slightly young new debate, a debate about whether the best of the margin profile is pretty much behind us, and B, whether there is a lot of risk perhaps that would be building in the system because of the kind of lending that's taking place, Naren. Fitch put out a report earlier, I think, a day or two back, highlighting some of these issues as well, because a lot of it is unsecured lending. It's on the retail side. That's the part where banks have built their books, in this cycle at least. Does that concern you at all? Would you look at any kind of profit taking at all, PSU banks, private banks, or even NBFCs?
See, what Warren Buffett has written for the last 25 years is that this is a sector where you have to invest more carefully. And because it's a leverage sector. And our view is that if you look at the way Indian banking sector is, the top banks have been lending to only the safer segments of the market. And if you look at the corporate sector, there have been most of the corporate sector lending is extremely safe compared to what it was 15 years back. So that segment is safe. The top of Indian people who are borrowing is safe. Most of the mortgage lending is safe. So I believe that, people who are doing prime lending is very comfortable. And in that area, that is one of the few areas also where valuations have been also more reasonable. So, for us, both financials and power are two sectors where we find, again, more comfort, because valuations are very comfortable in financials. Of course, there is a problem that margins in financials have been high. That is, net interest margins have been high, and NPLs have been at record lows. So those are two small problems with that. Things have been very, very good. But otherwise, I would say at least the valuations are very, very reasonable in the context of the past. And that is a real positive, along with power, where, power is a long cycle industry. You can't put up a power plant overnight, and power demand keeps rising. And for 3-4 years, there was almost no power plant put up. So, we're going to have a fair amount of demand for power over the next 3 to 5 years, emanating out of everything. And so I believe that financials and power are two sectors which are definitely looking interesting. And financials on account of valuations, and power on account of cycle. And we believe that these are two other sectors that one can be positive on. The only trouble with financials is not fundamentals, it is technicals, that if at some point of time there is a global correction which forces the FIs to sell, financials are the biggest part of the portfolio. So the problem is not fundamentals in financials. The problem is only that it is the largest part of any foreign institutional portfolio at this point of time. It can be a positive also, so that if they have $10 billion and they get $1 more billion, they'll put 30 to 40% again in financials. So that is the financials.
No, got that. A couple of questions, Naren. In financials, you would stick with banks, or you would look at newer niche areas, microfinance companies, for example, we hear a lot about nowadays, NBFCs?
See, we can look at them, but they are not scalable opportunities when we are managing large amounts of public money. So, in that area, you can put small amounts, not large amounts. And then, the amount of research that you have to do if you are going wrong is also much higher. Financials is a scale game. When we invest in India's largest 10 best banks, it is much easier because you can put another $1 billion to work of public money without having to worry too much. So that's why we are focused on the large banks, but we are not against having some small investments in some other parts of the cycle. And at this point of time, it appears that even the other areas are doing well, but the other areas require much more bottom-up research on a continuing basis. And currently, of course, many of the other areas are also doing well at this point of time, which includes microfinance, vehicle finance, etc. And we are luckily not in fintechs and those kind of areas. I think those areas have seen much more problems, but we are not in them because we are only in listed securities.
No, got that. By the way, Zomato is up 7%. It's the top volume traded gainer. Stocks at about 72.5 or so now. So it's doing very, very well. I mean, actually, I was looking at how earnings expectations have moved after the fourth quarter earnings. PB Fintech, Zomato, Delivery, these are the kind of names which have seen some of the largest revisions higher for full year FY24 earnings after Q4 numbers. So that's interesting. And Naren was making that point as well. We've been talking about this pack with him over the last many interactions. And, he's gradually been, warming up to the sort of these talks and these ideas. I remember, Naren, you telling me that you've delegated this to your team, right? And they're looking at it and you've given them a free hand. Okay, I want to come back to something that you said the last time you were on the program, Naren. You said that we are in a low to moderate return environment. You spoke about how this environment is different compared to the past. The past we had printing presses on, etc., which is not the case. And for solid returns and high returns to come, we need the presses on once again. Has your view changed, Naren, from the last time that we spoke, or you still believe that? Contextualize your views now. Go on.
See, in between, what has happened is that the Japanese central bank has been printing a lot of money in between when they bought different bought bonds. And when the Silicon Valley Bank and the First Republic Bank issue happened again, the Fed actually gave a lot of money again, but not at zero rates to the system. So I think in between there has been again a lot of money dispensed by the global central banks. Again, I think they're going to stop it. So our view is that, we are in a lower return environment because first of all, you have to remember across the world, we are not in a zero rate environment. So you can invest in debt and get 4-5% very easily across the world, except in Japan. And we think even in Japan, it's possible that towards at some point of time, they'll say that we can't keep on printing money in the scale that we have done. So what happens is that results in a situation that we will move to a more moderate rate environment because you're not going to be able to print money on the way that we did between 2008 and 2021. And the side effect is clear. The side effect is inflation of printing money. And that results in a situation where I think we will move into a moderate return environment. But today what has happened is it's been a structural, so money keeps coming in. And that's why you don't see it. But periodically we will have these corrections and then the market will move to a more moderate return.
Naren, just to take that point, you've also been advocating, flexi funds, investment into debt, etc. Does that view remain the same? To be able to switch from one asset class to the other, or is equity looking?
We have been recommending clearly categories like equity savings, balanced advantage, equity and debt, balance and multi-asset, along with flexi cap funds, because what we believe is that the next 3 to 5 years will see fair amount of volatility. So if we have products which can allocate money between equity and debt, you're likely to have a much better environment. And if you have products like flexi cap category or multi-cap category, which again can allocate money between large, mid, small, again, you will have a much better category. Because right now, of course, mid cap and small cap are doing well. But if you have monies which can be allocated between the different capitalizations, we believe that the next 5 years can be much better. Both in capitalization and in asset classes, we believe that flexibility to have a better opportunity, because it is not that it is going to be straight one way. Right now, it appears to be straight one way after March 31st, but you go to the period December to March, it was not like that. It was actually straight one way the other way, that markets kept coming down.
Naren, before we let you go, Prashant was briefly mentioning Zomato, right? That stock is up almost 7% right now. And Jefferies, in their greed and fear note, once again reiterate that they've added Zomato to their India and Asia ex-Japan long-only portfolio list last week. It's also because Zomato has turned profitable in their food delivery business, but they now compare it to the Chinese shopping platform, the app Meituan, where they say that Zomato's market cap is now $7.1 billion. And if you compare it with the market cap of Meituan, which is its nearest equivalent in China, their market cap is $90 billion. So there is perhaps a big headroom for growth. Do you think this argument is valid, and what do you do with some of these names?
See, actually, we've had an open approach. If you see our published portfolio, you'll realize that what we did in some of these stocks, and you'll find that we've had an open approach. I've used some of my younger colleagues, growth-oriented colleagues, to take a balanced approach into many of these stocks. And so that's how we have approached these stocks. And but we have to be conscious of the fact that India has a certain GDP, some of the other countries have a certain GDP, and the market structure doesn't need to be the same. And we'll have to be conscious of many of these things. At the same time, you can't say no to everything. You can't say yes to everything. And that approach, I think, has worked for us the last 2 to 3 years. And that's why if you see our published portfolios, you'll see different new age stocks also in the portfolio, whereas just after listing at some point of time, we didn't have them. And that is the approach that we have, because we have to be always conscious we are managing other people's money. And we have to be conscious of the fact that we are not going to take extreme risks, because as long as we manage risk well, we can always get more and more money. And that is our approach that we have had at ICICI Prudential over the years.
Naren, always a pleasure listening to you. Thank you so much for joining in and talking to us about a whole host of themes, subjects, and areas that are very interesting in the market. Really appreciate you joining in. Well, that's the market conversation. Market that's having a pretty decent Friday so far. It is time to come back and kickstart our corporate conversations now. Well, we've seen some very, very strong numbers from DLF in the fourth quarter. The company's bookings, collections, and cash generation all are at record highs. The company's net debt is almost zero in the residential business, and the guidance for the current year, FY24, booking guidance is around 11,000 to 12,000 crores. Ashok Tyagi, whole-time director at DLF, is with us. Mr. Tyagi, good morning. Thank you so much for joining in. And
morning.
Sorry we had to keep you, on hold for a bit. We were just completing that conversation with Naren. First question, sir. I think the biggest headline that we've heard around DLF in the last 1 quarter is the 7 crore apartments that you were selling, or each apartment worth 7 crores that you were selling in Arbor, right? If that's the shape of things, then why conservative with the guidance? You did bookings of 15,000 crores in FY23. You're guiding for 11,000 to 20,000 crores in the current year. Some brokers say you're being too conservative. Why so?
Okay. So, obviously, as a matter of principle, it's better to under-guide and over-deliver than vice versa. That's been our philosophy. But that apart, we honestly were not expecting that the entire stock of Arbor of 8,000 crores will actually get sold out in Q4, actually in a matter of a few days. In fact, we upped the threshold for revenue recognition by saying that we'll only report this pre-sales if they actually collect the entire 10% of the initial payment plan and they all sign their agreement to sell, which normally takes 4 to 6 months, but actually within a month, the sales teams were able to conclude that. Such was the, if I may say so, the hotness about that product. So, our original plan was that we will do about half of Arbor in Q4 and hopefully half in Q1. And so our base plan for 22-23 was more like 10,000-11,000 crores. It became 15,000 because of this, the Arbor almost, I'd say, preponement of sales. I don't like that word though. And really, so what we believe is that our base sales plan is moving from 10, 11 to about 12 in the next year. Again, if in Q4 there's a strong happening like Arbor, one can't say, but we feel pretty confident about the guidance of in the 11 to 12 range, hopefully, and hopefully like this year and the year before this, we should hopefully be able to beat it. But right now, let's stick to that number.
Mr. Tyagi, hi, good morning. Prashant here. But there was that capital gains tax thing also, right? Which would not have been available after the 31st of March. Maybe some of it.
Yeah, so I mean, Prashant, this was a 7 crore, 7.5 crore product. So really, but again, I mean, if that played a role or not played a role, difficult to say. Frankly. I mean, one would really test it out only when we launch the next product in that category. I mean, the data points are obviously lesser, but the sale of our super luxury camellias, even post April, it continues to be on a strong footing, in that sense.
How many
units
seem
to be having that?
In Camellia, what is the status now? How many have you sold? How many are left?
So I think of the 429 units, my assessment is I think we have about 40 units left now. I think about 90% have been sold out.
429 total and 40 are left, you're saying?
Yeah. You know,
I've been hearing anecdotally that even in a market like Noida, there is a builder which is who's going to launch a project at priced at, hold your breath, some 18,000 rupees a square foot.
Yes.
What is going on? I mean, it is. Go on.
So Prashant, actually, Noida is again a great market. You know, it's been underserved of late because a lot of the traditional Noida developers, unfortunately, have gone into their own, tough stories. So actually, there's like a dearth of quality suppliers in Noida, if you will. But Noida has the pockets to afford a 18,000 rupees product for sure in selected sectors, and there are some sectors in Noida which are very attractive for sure.
Okay. Mr. Tyagi, you know, right? Prashant was asking you about Camellia. There are only 40 flats left because he's showing his personal interest in that. Prashant?
Yeah.
Just at a reasonable price of 2 crores.
Sorry, what is that?
At a reasonable price of 2 crores, the Camellia flat.
Yes.
So.
2 crores?
Isn't it? Is that...
I would send a check across right away if it is 2 crores.
No, but Mr. Tyagi...
You wish is what he said.
Mr. Tyagi,
no, sorry, I just had one question on that, because... I mean, you were telling Surbhi also about how the property market has sort of ballooned in a big way. The interactions that we've had with a number of real estate guys in the past couple of days indicates that everyone's eye is now in the Mumbai market. And I don't know whether there's any more space to build, but definitely people are coming through. Prestige was the earlier one that told us that, they're going big in the Mumbai market. You've shown some interest in Chennai as well, but does Mumbai interest you, and in the near future, any plans over there?
Okay, so Chennai, obviously, we have shown interest, you're right. In fact, we should hopefully be launching a luxury product in Chennai in the next 12 months, depending on the approvals and everything. And that, from a Chennai standpoint, I think that should be a truly marquee development. Mumbai is the fact is, Mumbai is the country's largest real estate market. We had one project in Mumbai, which we had taken about 15 years back with 2 other partners. Unfortunately, that's run into rough weather for a variety of reasons. But we continue to be sort of, looking around to see if there is a project in Mumbai where we can sort of tip our toes, Hopefully, we should be closing out something soon. And but again, that will be a small start, really, in that sense. We want to first sort of understand how the Mumbai markets and all work, and we don't anticipate becoming very big in Mumbai. I mean, we have no, but obviously Mumbai is a major market, and I think it is of some interest to us. And I think we do want to sort of, assess and see if there's a small project that we can enter with.
So just to clarify, I have to clarify because our producer just told me that, sir, 2 check mere bhi le lijiye. I mean, what Sonia said, I have to. Sonia said, the reason I said this, Sonia said 2 crores. Mr. Tyagi, the ticket size is 20 crores, right? Or more?
No, it's 35 crores. The flats start at 35 crores, right? If I'm not wrong.
The ticket size is now actually north of 40. So 2%, 2 crores will be a nice initial 5% check. That's fine.
I see. So, I mean, so that's called, Sonia, the reason I said 2 is because, you get that's value, what do you call it? Value investing.
Initial check. That's the initial check.
You were talking about the initial check.
I think I can at least look at community investing for this 40 crore. We'll do it. We'll do a pooled, crowdsource, do a pooled investment vehicle.
Yes.
But, and Mr. Tyagi, you spoke about Mumbai. I remember I used to report on real estate back then. It was a Mumbai textile mill. It was a marquee deal of its time, the highest value deal. I remember that, very close to our old office. But anyway, to come back to the key takeaway from all that we're discussing, what is the new definition of premium now? I mean, 7 crore, 10 crore, how are you defining premium? Okay. And how much of your sales this year will come from the premium category? Is this the direction that the market is now taking? And then should we expect better margins then in that case as well?
Okay, so I mean, we have made it pretty clear that we are not in what is loosely called the affordable segment, which is, the sub 50 or the sub 75 lakh segment. I think we have immense respect for the people who are there, but we at least don't believe that we can make adequate money on that. So our ticket sizes typically, even in New Gurgaon, begin at a 1.5 to 2 crore level, which is broadly our ticket sizing. And from there it moves right up to Camellias, which is 40. If you look at our guidance and our presentation for the previous quarter, we do, I think we will begin with projects in the 3 to 4 crores range, and then hopefully have projects which are in the double-digit range. We have no plans right now of getting a Camellia sequel fully, but I think we should have one more project coming up on the Golf Course Road sometime in this fiscal, which should again be a very, very marquee investment, and a very marquee property. So I think our bias, Surabhi, will continue to be on the premium and luxury and the super luxury segments versus the sub-premium segments. That's what we believe our land parcels lend themselves to more naturally.
So just as a percentage of sales, how much will come from premium and how much will come from super luxury in 24?
So in 24, the super luxury proportion would drop because all we have left in the definition of super luxury is about 40 odd apartments in Camellias. So so I think even if a substantial number of them sell, it will still be a small proportion of our total pre-sales guidance that we have given you. So the pre-sales guidance will be in the luxury, premium, and the between premium and luxury segments. And most of it would be actually driven by the new launches, be it the residual tower that we have in One Midtown in Delhi, or the new development that we are planning in Gurgaon, or some of the newer floor developments, etc., that we are planning in other geographies, including the one that I mentioned to you about Chennai.
I just have one final question, and this is, a common narrative which is picking up now, because houses have become so unaffordable in the metros, especially for the common man, right? People are now preferring, especially the younger generation, is now preferring to rent rather than buy a house. And that's the increasing chatter that how perhaps a rental home is better for you as an investment option than buying outright. In that context, you do rental, you have a rental portfolio, both office as well as retail. Tell us a little bit about the income there. What kind of growth are you looking at, and could it be outsized?
Okay, I don't know about the outsized piece, but pure numbers basis, I think our total rental numbers this year were just north of 4,000 crores, approximately 4,000 crores. And we anticipate, Sonia, that by March 24, we should exit with a run rate in the range of 4,800 crores plus, So I think from a run rate standpoint, about a 15 to 16% growth in run rate should happen this year. Predominantly driven by obviously the usual suspect, which is the annual escalations that come, the mark-to-markets, and a couple of new properties, one in Gurgaon as well as in Chennai, which should come on stream this year.
So this is for commercial rental, right? Commercial rental is what you're talking about, 4,800 crores.
I'm talking. This includes commercial and retail. The retail component of this is about 800 crores this year. On the retail piece, I think we are pretty much running to capacity on the existing malls that we have. We are in the pre-design phase of what we call the Mall of India Gurgaon, which would be a bigger mall. It would be like a destination mall, which I think, if all goes well, hopefully in a year from now, that should hit the construction stage. So we do believe that in the next 4 to 5 years, our retail volume should double. Just to give you a perspective, the retail is about 11 or 12% of our total square footage area and contributes about 18% of our total rentals, And I think, so retail does tend to, perform better on a per square foot basis. And
Mr.
hopefully,
Tyagi,
this additional investment in retail.
Mr. Tyagi, just can you leave us with a number if possible? Rental income was just below 4,000 crores in FY23. Can you give us a range for 24? Total rental income?
So I think the total range should be about 4,600 and the exit run rate should be about 4,800.
Okay, all right. Thanks a lot for joining in, Mr. Tyagi. Always great speaking with you to understand not just about your own business, but about how unaffordable the real estate market has become for the common man. But jokes apart, it's good to see that the boom is back after a long period of lull.
Thank you, ma'am. Thank you.
All right. Well, let's slip into a quick break. On the other side, another piece of this premiumization puzzle. We're going to talk about M&M's auto sales, which were also very strong, courtesy SUV. Vijay Ram Nakra of M&M will be joining in just a bit. Okay, well, let's move on from real estate to autos now. As we were telling you, the premium end of the piece is working very well. Even in the auto space, May was a strong month for M&M in terms of auto sales. Total sales surged 14% year-on-year. Company witnessed a strong growth in domestic passenger vehicles, while demand for SUVs is also pretty good. Vijay Ram Nakra, the president of the automotive division at M&M, joins us now to talk about that. Mr. Nakra, good morning and thanks for joining in. Can you tell us, on this base, it's the 14% growth that you saw overall. Domestic passenger vehicle sales were up 22%. What was the retail sales this time? And what kind of growth do you see in June and July?
Sonia, thank you. Good morning, everyone. Thank you for having me on the show. I think the demand continues to hold strong. So your question being specific in terms of retails. Retails have been very much in line with billing, largely on account, as you know, that a lot of the products and brands in our portfolio have a very strong demand, whether we talk about the XUV700, the Scorpio N, Thar, especially with the recent launch of the rear-wheel drive, XUV300 So, given that the demand has been extremely strong across the SUV portfolio, retails for us have been very much in line with it.
Sir, good morning, Prashant here. But
Morning,
if you look at UV volumes, right, month on month there was a small decline, about 5% or so. Could you explain that and whether, you were saying, what kind of sales are you seeing this month so far?
Prashant, I think I just want to put that in context, and thanks for asking that question. Recently in our, when we had the media interaction after our annual results and Q4 results, we had mentioned there that if you look at the performance, there are certain challenges that we face in terms of semiconductor supplies. Specifically to previous month, if we look at our numbers, we've been saying that we have a capacity of about 39,000 for our SUV portfolio. Last month, we ended just shy of 34,000, which included a number of 1,000 numbers for exports. Now, about 10% of the impact has been on account of semiconductors, something which I've been saying consistently in the last 6 months or so. Last month, we had, we had a short-term impact because of certain engine supply components at our suppliers' end. So as a result of that, the impact against our capacity of 39,000 has been 13% as against the 8 to 10% because of semiconductors. So that's the reason why there was like you said, about a 5% degrowth in number compared to the previous month, largely impacted because of the short-term disruption of certain engine components that we had at our end from our supplier. On your question on how do we see this month, I think some of these supply constraints, semiconductors, as I've said, is not just for a month or two, it will continue for some time to come. But the specific engine-related component, we are doing everything to bring that under control. But we could probably see a slight impact of that carrying on into this month.
So, Mr. Nakra, given what you're saying, that there are these supply-side constraints, both on semiconductors as well as some of the other parts, what is the forecast for the year? I think the average PV industry growth is supposed to be somewhere, mid to slightly high, but single digits. 5 to 7% is the range that Sonia was telling us about earlier. Will you be in line with that? Can you actually better that? So full FY24, what's the outlook like?
Survey, I don't think I will be able to give a guidance, but just first to begin on your first point, the short-term engine-related supply constraint was largely last month. We are doing everything to bring it under control this month, so don't see that continuing into the future. As far as the full year is concerned, you're right. The forecast given out by SIAM and some of the other agencies is that the PV industry will grow in the range of 5 to 7%. SUVs as a part of PVs has been growing faster than the PV category. SUVs today is as much as 53 to 54% of the total PV industry. We believe that that penetration level will continue to be strong. SUVs is sort of the consumer's choice in the recent past, and we believe that that demand will continue to be strong going into the current financial year of F24. We continue to have a strong pipeline of bookings. We still continue to get over 55,000 bookings every month. Our cancellations are less than 6 to 8% depending on the brand, and hence we believe that the demand for our brands and products in our portfolio will continue to be strong in FY24.
So you'll outgrow the industry, Mr. Nakra, then, given that optimism and the sense that you're giving us in terms of the monthly booking run rate?
I think we'll wait and see how that plays out.
Okay.
Okay. And, can you help us with what the pipeline of new launches are looking like? I mean, you've had some stellar launches up until now, but over the next 12 months, what can, consumers look forward to? And would you at some point in time look to expand your capacity further?
Sonia, two things. One, firstly, on new launch, let's say FY24, the focus is going to be on scale up. And hence, I'm kind of answering your second question first. We are at 39,000 capacity. We've said that we are increasing capacity of the XUV 700 to 10,000 from 6,000. The Scorpio N from current 6,000 again to 10,000. Some increases in capacities of XUV 300 and some of the other brands in our portfolio. A large portion of that should come in probably in Q4 of this financial year. So that's when we will pivot from the current 39,000 to 49,000 as capacity for SUVs. Similarly, the capacity for the pickups are also being worked on. As you would know, we've not spoken about that, but we continue to be market leaders with a significant margin of market share, even in the LCV less than 3.5 ton, with the Bolero Max pickup as our brand. And now coming to your first part of the question, which was on new launches. I know that there is a lot of excitement around the launch of the 5-door Thar, and we are very, very excited and humbled by the encouragement that we are getting for the product to be launched. And we also have a mid-cycle enhancement on the XUV 300. But I think we've said that that is that is in calendar year 2024. So we would not be able to give out the exact timing now, but calendar year 2024 will see those two launches.
Okay, calendar year 2024, got that. Mr. Nakra, just one final comment, if you can give us on the auto segment margins. You are still some time away from double-digit margins in the auto segment, but there is definitely a pickup. So same time last year it was around 5.5%. Now it's come back to about 6.6% margins. Is there scope now that raw material prices have cooled off? Is there scope to increase the margins in the automotive division to about maybe double-digit even in FY24?
Now, again, Sonia, no guidance on that, but clearly, the focus on improving margin is clearly an area that we are looking at. I think there are multiple levers that one works on. Clearly, a huge amount of focus on keeping costs under control, our fixed costs under control. A lot is being done in the area of looking at how we can work on reducing material costs. And as a result of that, we are going to do everything to try and get margins up.
Okay, Mr. Nakra, finally, leave us with the sense of rural demand as well. I mean, you spoke about, of course, the premium end of the market, XUV 700, obviously very, very popular in the urban centers. What's your read-through of rural demand?
So even now, as a part of our portfolio, about 53% of sales is still what we call rural/semi-urban. Demand continues to be extremely strong there. So when I talk about a strong booking pipeline, a lot of, like I said, almost 40-50, or rather 50% plus of it comes from rural India. So demand is strong in rural India. However, again, let me break that into SUVs and commercial vehicles. On the SUV front, we are seeing that for the price bracket between the sort of 8 lakhs to 10, 11 lakh price point, we are seeing certain headwinds come in there in terms of demand. Likewise, on commercial vehicles, we are seeing that there are headwinds in rural India. And I think largely this is impacted because of sort of interest rates. And as that start cooling off, we believe we should start seeing strong demand coming back. Not saying that these have got sort of significant impact to either numbers or industry growth, but these are headwinds in the horizon that can clearly be seen by the industry and also for some of our brands in our portfolio.
Okay, thanks a lot for that, and all the best for giving us, all the best for the future, and thanks for giving us all the details on your business. We appreciate it. That's M&M, very bullish about the SUV segment. They have a slew of new launches coming through. But overall for the industry, they're saying a 5 to 7% growth for the passenger vehicle industry is something that they're expecting. Let's not forget the lower end of the market is still struggling a bit. Let's take a quick break. On the other side of the break, Mitesh Thakkar will join in for some technical trades. We'll also get you a couple of buzzing stocks in trade today.